Welcome to the Real Investing Show with Tim Herridge. Each day, we'll provide real investing for everyday investors. Tim is a nationally recognized real estate investing expert, podcast host, and public speaker. He built his businesses from the ground up and is here to help you do the same. Here is your host, Tim Herridge.
Welcome back to Real Investing. I'm Tim Herridge. Thank you for swinging back by today. Kenneth Writes, how might a possible economic collapse, real estate and banking, in China affect real estate market in the United States? Great question, Kenneth. Good to see you back. It's interesting. Global intertwinement is on the rise. And when you look at the dollar being the safe haven with so many countries, I hate to say it, in my opinion, a economic collapse in China, which, number one, I don't think will happen because they have the ability to just push a button and make everything go away because they control everything. But anyway, I don't think that's going to happen because when you look at it, we're just insulated. At the end of the day, the Chinese market is largely driven by the government. And will our equities be okay? No. The ADRs and the other, ETFs will struggle if there was a collapse, as you put it. But I believe that the commercial real estate would be impacted. Large commercial properties, some of the multifamily properties, the big, large REITs could potentially see an impact. But as far as the residential real estate market, we're operating in almost the Stone Ages right now. It is just purely a supply and demand market. And unless interest rates just went through the roof, out the building, and into the stratosphere, I don't see a scenario where anything going on in China could impact U.S. real estate enough. Does that not mean that if they completely shut everything down, it wouldn't mess with rates a little bit? I guess. But what would it really do? Probably drive up the short-term rate, which would then drive down the long-term rate. So I don't know. If it drove up the long-term rate, because if there was an oversupply demand for the treasuries, the 2 and the 10s, I guess you could, see that impact long-term rates. But I don't know. I just, when I look at it, we're going to be affordability driven for the next 3 to 10 years. It's just, I'm not sure if there was a disaster declaration and the government started building houses, if we could catch up anytime soon. It's just my opinion. So of all the things I look at, something happening in China that was contained to China and China's financial markets, I don't see that impacting us a whole lot, other than, here's the thing, supply chain, building materials, that could be affected. If that's affected, again, we go back to the supply and demand equation. And you have less supplies, then even less demand is offset, just like we're seeing in the market today. Hope that helps, buddy. Thanks for taking the time to write in. Hope you are well. If you're listening, you have any questions, hop over to ihavelunchmoney.com, submit your question. I'd love to answer them for you. I'm Tim Herridge, and I'll see you tomorrow.
Thank you for hanging out with us today on Real Investing. If you have questions, comments, or feedback, please visit ihavelunchmoney.com. Tim can't wait to hear from you. We're always grateful for your reviews. And if you enjoyed this episode, please subscribe and share it with your friends. Remember, the business is the vehicle, not the dream. See you next time. The preceding program is provided for general education purposes only and does not constitute legal, tax, financial, investment, or other professional advice. No information contained in this program should be construed as financial, investment, or legal advice from any individual, author, host, or guest. You should always consult a financial advisor before investing.